I've got bad news. I'm so sorry. I really do hate making these videos, but when there is bearish signs, we have to talk about them. We have to say that there is bearish signs. And I hate it because we all love Bitcoin. We all want Bitcoin to go to millions of dollars. And the truth is, we're going to do it. Bitcoin is better than gold in every way, shape, or form possible. You can't transact with gold. You cannot buy small dollar quantities of gold. You can't verify the gold that you're queuing up to buy is 100% pure gold. And you can't take your gold anywhere with you. And the governments, if they really want to take your gold away from you, they can do it. So we know that Bitcoin is better than gold in every way, shape, or form. It's just that society hasn't understood yet. And when they do, there's going to be a rotation, a massive rotation where Bitcoin becomes more valuable than gold in terms of assets by market cap, which is currently about 13, 14x away. So there's still a massive opportunity with Bitcoin, and I still believe that it will go to millions of dollars, and it's going to take some time. But in the short term, if we focus just purely on the short term, there is some not good news that we have to share and discuss on today's video. So if you want to find that out, then make sure to watch until the end. We also have the CME gap charts. We filled the CME gap, which is good. That's nice. So there is a little bit of a balance here between the yin and the yang. We did end up filling the CME gap on yesterday's video when we got this pump because gold was seeing a correction. And as gold saw the correction, we saw a Bitcoin pump. I mentioned to not get too excited and that the CME gap was not closed. Even though we got very close to it, it doesn't mean that the CME gap was closed. You have to close it properly. Even on the Crypto Kids Telegram, I stated last night as that pump was happening, not too excited about this Bitcoin pump at the moment. Update soon. Then we recorded the update. I said the CME gap is very likely going to close, and we close the CME gap to the downside. So what's next for Bitcoin in the short term and macro? Those will be the topics of discussion. Guys and girls, I'm finally out of the hospital, which is amazing. After 6 days, I'm finally out. I feel much better, and tomorrow I'm going to be in the office. I've missed it. So thank you all so much for your likes and support. It's been a tremendous thing, a tremendous amount of support. Really, really do appreciate it. And yeah, let's get started off. I think we can start off with the bad news, and then we can go into the CME gap and everything. So the bad news is, right, we are creating a double top. It's a repeat of a double top that took place in December, January of this year, so early this year, late last year. And it's also a repeat of the double top that we experienced in March of 2024. This is the third time we're doing this. Every single time Bitcoin creates this double top, when you go below the bull and bear market support band, you come down to the 54 simple moving average. Simple as that, right? It's as simple as that. And the 54 simple provides you with a bounce. So to me, in my trading, I'm going to buy up more Bitcoin if we are to fall to over on weeks, which if you want to trade, you can sign up using the first link in the description to get a 20% deposit bonus. I did put a limit order to buy more Bitcoin at 100.2K. That's going to be my final DCA Bitcoin long. So we've been buying Bitcoin together since 77K, and $100,000 is going to be my final point of DCA. Simply because if you do lose the $100,000 mark, then you're going to be confirming a bear market. I don't think that's going to happen. I think we're going to come down to it and then see a bounce. How big of a bounce are we going to see? Not sure yet. I think we're going to see a bounce, and then whenever these two end up crossing, that's going to mark the beginning of the bear market. But I still do believe that 100K is a good buying opportunity because of this repetitive pattern that's been taking place. So I'm going to be buying with a limit order Bitcoin at 100K, and the bad news is that we're likely going to come down to 100K. So that's the bad news. And if we jump into the short term, the CME gap is now closed. That's good, but we look weak. We unfortunately do look weak here. If I jump to the daily time frame, there's a pattern that's known as the ascending broadening wedge, or it is known as or ascending or descending broadening wedge, or it's known as a megaphone pattern. And it can be visualized as so. So this is the megaphone pattern. It looks quite similar to the megaphone pattern that was created. I know it's a little bit it's a little bit random, but fractals between different assets do occur. So this chart you can see right here is the soybean chart. And soybean created a megaphone pattern from a bullish price movement, and then you got a rejection at a key level from moving averages. And following weakness, because you weren't able to continue higher, soybean decided to experience a plummeting in price action. So when you compare it to Bitcoin, you got rejected at that sell zone, and that resistance came from the bull and bear market support band. You can clearly see that it's quite similar to the soybean chart. This is not good. This shows weakness. And another reason why I think we're going to come down to $100,000 is that fractal between Bitcoin and soybean. So not good, right? Short term is not good. Macro still bullish. That's the updates that I want to give you, that I wanted to give you for Bitcoin. And there were so many questions in the Telegram community asking, why does the CME gap always end up closing? How does this work? And I just wanted to give you guys a quick explanation. So basically, the CME futures charts is the CME futures. Think of it like kind of like a derivatives contract. It's not spot. You're not buying spot Bitcoin. So it's a futures contract. And there is sometimes a deviation from the spot price of Bitcoin. The CME tracks the CF benchmark Bitcoin reference rates. This is its benchmark rates that the CME futures tracks. So whenever there is price volatility over the weekend and the CME is not open, it will revert to the benchmark price rate as soon as it opens. But obviously there was some price action there, and now there's a little bit of an arbitrage. And because you have that arbitrage and because you have that gap in price, market makers try to bid and sell and bring you back to that market equilibrium to meet the spot price action and then fill the gap where there was some low liquidity. That's one. And number two, it's sort of become a self-fulfilling prophecy because we know that 90 to 95% of the time, these gaps end up filling. People put limit orders to buy at those gaps. And whenever you put liquidity into a specific price range, that liquidity gets collected. So it's a self-fulfilling prophecy at this point, and it's also to find market equilibrium. That's why CME gaps end up filling. But with that said, thank you so much for watching. That concludes today's video. Sorry to be the bearer of bad news, but realistically, is it actually that bad? It's not really that bad. It's just, you got to position yourself wisely. So thank you so much for watching. Take care, and as always, I'll see you on the next update video tomorrow. Bye-bye.